Greetings, everybody. This is Jeff Scott, and welcome to this week's edition. We'll wait for it to start of my top-down review. I know it's late. Posting this Sunday night, I was up in Atlanta at a wedding, which, frankly, with COVID is not the same. Although we had a wonderful time, but the travel, the hotels, it's an interesting time, as we all know, because we're all living it together, but it's still fun to get away. I asked the question today, does Friday's big move mean that bad breath does not matter? It's the 22nd. Again, my name is Jeffrey Scott, and for those who've not been here before, my email address is hgsi.gmail.com. If you're watching this on YouTube, there is a gear in the lower right-hand corner of the screen. If you click on it, you'll be able to change the resolution. I record this in 4K. So if you're watching it in standard definition, it's not going to look very good. What else would I tell you? I guess that's about it. And I welcome all remarks, positive and negative, and also thumbs up, thumbs down, just so I get some numbers. So maybe someday YouTube will actually promote this. I doubt it. Another thing I would want to point out is I do this as an unpaid volunteer. Nobody pays me to say good or bad things, as I'll mention shortly. This is for educational purposes only. Anything I would say is in the spirit of education and should not be considered investment advice. I am a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and uni loans are solely responsible for any decisions you make. When I do teach people how to trade, and when I retired from a prior life, I actually took a couple of years off with non-competes. I had some educational seminars, and I called it Be Your Own Guru. It all came from this guy here, who's been passed for a number of years, Ian Woodward, when he would say to me, Jeffrey, I'm not the guru. I teach you to be your own guru. And he'd say it in a wonderful British accent. And it really makes sense. It's about learning from lots of smart people. You can see people here you recognize, John Person. I also lost a good friend, George Lee, in the last year, Sagar, Roy Kelly, the O'Neill disciples, William O'Neill himself, Ron Brown, Nvidia. I've learned from a lot of smart people, and the way I trade is how I ended up when I put it all together. I have a lot of software, and actually I should have updated this. I use TradeStation and Thinkorswim. I'm playing a lot now with a program called Wealth Charts. It's not a replacement for HGSI. May or may not, I don't think it's a replacement for any of these, but it's got an amazing amount of tools, scanning tools, charting tools. Rob Hoffman puts it out, and I should be adding this. I add it when I remember. What I would recommend is the next time you see a Wealth 365 program, usually does a week long. He takes his program and he discounts it like 80% during that week. And it's for $1,000 a year. It's a pretty incredible program with data, including futures. I do my analytics with HGSI, EdgeRater. Whether I'm looking at TradeStation, Thinkorswim, HGSI, I've got John Person's tools. I use Dr. K's tools in Thinkorswim and TradeStation. Sagar's wonderful Q tools and standalone tools I use as well. As I said, I'm not paid by vendors to say good things. Sometimes I'm offered what's called an affiliate fee. Whenever somebody introduces you to somebody who sells you something, kind of like a realtor, they get a commission. I don't want a commission. I just tell them to give you a bigger discount. So I'm truly an unpaid volunteer, and this is just education. Speaking of unpaid volunteer, this is a program that I've been using forever, ever since the demise of a prior company called Telescan, and George Roberts, the proprietor, in partnership with Ian Woodward and a data company, which is no longer available, called Quotes Plus, came up with HGSI. Really a tool so that we could duplicate a lot of the data and charting that we saw in daily graphs, Investors Business Daily, etc. It's a great program. Its user interface is a little challenging. Probably could use some modernization, but it is so powerful. It's always the nucleus, the brains of what I do. Here's the website. Under investing strategies, you'll see hundreds of videos by me and Ron Brown and others, or I should say Ron Brown and I and others. And under free 30-day trial, you get a 30-day trial. Now, I kid you not, if you've never used this program before, it's a little bit challenging. Ron has posted some educational videos, as do I, and both of us are happy to help people figure out how to see the power that we see. Now, I talk about this curve all the time. Stocks are cyclical, futures, forex, industry groups, whatever we're talking about, they always go through this. If you think about an uptrend, it's kind of this, it rolls over, it goes up again, higher high, comes back down, higher low, higher high, so on and so forth. Where are we today? Boy, it's an interesting market. Well, if you talk to most people Tuesday through Thursday, it felt like maybe this is it. We're finally rolling over. Bear market coming, big correction, who knows? And then what happens on Friday? Market reverses into strong day across. It feels to me, as much as it's hard for me to believe, that we probably have a little bit of a move to the upside. I am not in the camp that we have to see a big bear market like the rest of the world. I'm well aware of all the bad breath that's going on, issue-wise, but not necessarily up-down volume-wise. I think that the market has a lot of risk. I won't say it doesn't, but to me, a risk would be a 5 to 7% correction, which would be painful for many of us, especially if you do options and you're in margin. But it's not necessarily mean that we have to have a bear market. It really felt to me like last week we started another move up, but it's hard for me to believe that, at least on Friday. So where we are in the market should dictate how you play it. I mean, I've been in small ball. I have less positions. I still have a lot of positions. Let me be honest. I mean, I have way too many positions always. And we're not going to go into that since I'm talking and not answering questions and why. But I have a mixed market. I've got a lot of verticals, mostly long, in which case I reduce some of my risk by selling and collecting premium to offset the premium I pay for. I have puts, collared some of my major positions when I'm nervous. Believe me, having $3,700 puts on Amazon when Amazon just dumped was a good thing to have. And the deeper they get in the money, there's almost no time value to keep holding them. So I have puts on some of my major positions. And then if you look at my portfolio, you'll see things like Mr. Softy, Salesforce, Apple, companies that have done extremely well and are setting all-time highs. But I have shorts, I have longs, and I even went into the weekend probably mistaken with a couple of contra ETFs, which I'll get rid of early in the week if the market continues to go higher. But this is not a market that's obviously going to the moon. It just doesn't feel like it's 2020 in February either. Partly why I'm bullish, forget what each of these tickers are, it's irrelevant. The point to this slide is, as Ian would call this, it's a sea of green. Here is materials, mostly green. Energy, surprisingly mostly green. XLE is up 20% on the year. It's doing about the same as tech, but it's been stinky for the last couple of weeks. Just look at oil. Look at financials, almost all green. In fact, every financial was green. This includes insurers. It includes banks, regional banks. Wow. You get down here to industrials, mostly green. Consumer staples, probably 50-50, not a surprise. That's a more defensive. This was not a defensive day. Technology, mostly green. Discretionary, mostly green. Interestingly, every utility stock was green in the major ETFs. These are the components were green on Friday. Healthcare, mostly green. Communications and social, almost all green. Real estate, predominantly green. That's a sea of green, a very strong bullish day. Now, I do a lot of things to try and give me an edge. And over the years, I have found that finding stocks that, we used to talk and still talk about the high jump, where you take the current price minus the 17-day simple, the current price minus the 50-day simple, and the current price minus the 200-day simple, and you add that number up. And the high jump indicator that I've been involved in and that I have in most of my platforms, which I adapted from what I learned from Ian, basically says if you're the most extension from your moving averages going back, say, 200 bars, you're probably extended and you're likely to revert to the mean. So I don't like to buy stocks at the high jump. Well, it turns out you can flip that. And if you think about it, if your price is below the moving averages, price minus creates a big positive number, and you turn out to be, you can do a minus high jump or a low jump number. And so I do the high jump, I do the low jump, and I look at how many stocks give me a reversal candle, just a simple green candle low at the low jump. So these are stocks that are stretched to the lowest that they've been in a year. And that means they're as crappy and poopy as they've been. And when I get reversals, I get interested. Well, look at the number of stocks. Normally, there's 5 or 7. I think there's 177 or 27. I can't see. I could probably read if I look over here. I've got a big monitor that I use for the projections. And so, let's see. 127 stocks giving that signal. I've had some major winners because typically I see this at times of major reversals. Now, let's take a look at the major markets. I think there's a lot of interesting things we're finding. I'm still playing around with different setups here, so I apologize. It looks like there's little delays when I come in and out of slide mode. So let's start with simple daily charts of the index futures. I like the futures for this view because they're not yet. So here is the S&P 500. It should be going back a year. Let me make sure that's what we're doing here. 1 year daily. Not quite a straight line, but pretty much a straight line oscillating around the baseline. Clearly it's had a big run. These are some of the Fibonacci extensions. It's blowing right through. It does seem to go sideways every time we get up to one. It broke out, and you can see set an all-time high in the market. And now what's going on? We pull back Monday, Tuesday. Actually, see, Tuesday, all-time high was on Monday, I believe. Tuesday and Wednesday, we pulled back. Thursday, we actually opened and traded down, bounced off the 50, and Friday closed back up at the 17-day simple. That day here is today. You will see in TradeStation, E-minis actually flipped to a buy signal for John Person. To me, bullish trend, pull back to the 50 like it's done here, and 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 it bounced. Bullish or bearish? I gotta be bullish. I'm nervous. I'm nervous about the breadth. The pullback to support it a bounce, isn't that what you want to see? How about the Nasdaq Futures? Clearly not nearly as pretty. Their uptrend was earlier, and then it flattened when the rest of the market caught up. But, I mean, in fact, if I was to go here and just type in 2 years of daily, you see what I mean? I mean, this had a big move up here. And then, yes, it's still gone up this year, but it was out of the chute that this thing had a rocket. So we go back to where we were, daily times 1 year. So again, a little bit looser than the S&P, not the same angle of ascent, but isn't this what you want to see? It pulled back, and on Thursday rather, pull back, touch the 50, close with a green candle, which means it closed higher than it opened, traded higher on Friday, and it's up a teeny bit after hours or pre-market on Sunday here. Bullish or bearish? That's bullish, in my opinion. The Dow. Well, the Dow's been a little bit more challenging. The Dow has been going sideways a bit since, May, and it set an all-time high, which is obviously bullish. And then Tuesday, Wednesday, Thursday, Friday did the same thing as the S&P. But what did it do? It tagged its 50, and it bounced. Now it's knifed through the 50 on multiple times. But it's got plenty of times when it's tagged the 50 and bounced up. Bullish or bearish? That's a bullish signal. The Russell. The Russell's been clearly in a sideways market. I mean, with the low here and the high up here, sort of a Darvish box. You buy it off the bottom, you sell it off the top. And what did it do on Thursday? pulled back and bounced, and now it's above the 200-day moving average. Bullish or bearish? Well, certainly less exciting, and they had the worst week of the major indexes. But, I mean, I'd rather be buying than selling right here, unless it breaks down below that 200. So I'm cautiously bullish. The VIX, a buy signal comes in, it runs right up, and then what happens on Friday? A major reversal from 23 all the way back down under the 200, and not doing anything today. You wouldn't expect it to be moving up. So falling VIX, futures hitting support and bouncing, more bullish than bearish, at least tonight. Monday's a whole new story. And then the dollar, which to me has been painful because I'm a growth stock investor, and a lot of the stocks that I buy are growth stocks, small cap growth. And as the dollar has risen, small cap growth has stalled, and maybe a reversal of the dollar might be helpful. The dollar broke out, as you'll see on the weekly chart. The dollar's way off its highs. Here's your 200-day moving average, and you finally got above it. But this looks like a potential reversal in the dollar. So I look at this, am I bullish or bearish? I gotta be somewhat bullish. Now, I'll just flip to the weeklies real quick. I don't think I need to go through them. Maybe I won't put there. I use this program forever and I still make mistakes. If we look at the weeklies, I just want to point out the sideways motion here, not quite the same sideways motion in the Dow. The beautiful runs up on the Nasdaq and the S&P. The VIX going nowhere, and the dollar, yes, had a big run up, but to get above this weekly 200, which was support, probably is going to turn into resistance for a couple of times. So cautiously optimistic going into Monday, despite the fact that I too recognize that this market has some really bad breath. Good thing though, it has to wear a mask so you don't have to smell it. All right, so other thing I like to look at is we look at the expected move charts, and let's just pull those up. That would be these. And so the expected move, remember what this is? This is the cost of an at-the-money straddle, and it is usually plus or minus the cost of that straddle is how much expected move that future or that instrument should make. So let's say you're the market maker, I think it was 72 points or something on the E-minis this week, then the range is plus or minus 72 or whatever it is, so that's 145 points. But if you're selling a call and selling a put for $72, if it trades up to the green line, that means green line is break even, red line is break even. Anywhere between the green and the red, it means the market maker that's selling the option makes the money. And if you look at the S&P 500, although this week it did trade below the expected move, it finished almost where it opened, just below. And so if you sold the options as an option maker, you made money. The previous week, you made money. You made money. You made money. You had a break even. You made money. You made money. Do you get the theme here? The guy selling the options at the money straddle, 80% plus of the time we know that the market's going to fall within it. When it breaks below, I look for reversals or above reversals that I can play, but I also know that markets can sometimes make a big move and break right above or below. But 80% of the time, they're going to stay within that expected move. So the S&P, yeah, it was down a little bit on the week, but it closed just below where the prior week closed. If we look at the NASDAQ traded down. Remember, this was a playable bounce when you reversed on Thursday, green bar, buying it at the open on Friday made a lot of sense. But again, if you were the option seller, you made money. They're the smart money. This is what they think the range is going to be. And as long as the stock is within this range, the guy selling or the firm selling the options make money. Let's look at the Dow. The Dow traded up to an all-time high like the S&P and just dove. And what did it do on Thursday? A hammer just below. Green bar, once you got above that price, it was a great opportunity to buy on Friday. Closed in the lower part of the bar, but the option maker made money until it got below the red. Didn't make as much money as it would in the center. And then the Russell was the outlier. The Russell, which had the worst week, just broke right below, gave a great reversal signal here on Thursday. This is today already trading. Option makers lost money, closing just below. But this is a reversal, and to me, it was a viable reversible on Friday. The VIX, you could see the VIX had traded up earlier in the week, spiked, and came right back in. And then the dollar, I don't think did a whole lot. Actually, the dollar did break out, I'm sorry. But then it didn't do much on Friday. So the expected moves showed that some of the markets, the dollar, the VIX, and the Russell had pretty big moves. Take a second break. All right, let's close down the expected moves. And then the other thing I wanted to look at, if I want to make the bullish case, I've talked about bouncing off support and why I'm cautiously being a very key word. What am I looking for? I'm looking for this one. So I just sat there today before my plane left and said, let's do some regression channels. So I just took this last uptrend here, and I could have extended it, I guess, pretty much all the way back to in here. But I put the regression channel on, going back to May. This is the S&P, this is the spiders. And what did we do? We came down and we got close to the bottom of the channel and we reversed. That's just what you want to see. And obviously, I could have redrawn this in various places. I'll also tell you, I think if you put Bollinger Bands, you're going to find we came down and touched the Bollinger Band. We look at the Qs. A higher angle of ascent, because that's what the Qs have been doing, pulled down to the bottom of the channel, and we jumped. That's a bullish sign as far as I'm concerned. If I look at the diamonds, same thing. Now, the diamonds have not really respected this channel, but you got 1, 2, 3, 4 reversals, 2 failures, although this failure was a one-day failure and got back in. Bottom of the channel, you're likely to go higher. Top of the channel, you worry about going lower. And then lastly, the IWM, sideways channel, and you can see how, Darvish box trading, buy the bottom, sell the top, buy the bottom, sell the top. Where we get? We're at the bottom. We buy the bottom. So all of these could certainly break out of their channel, and that would be a bearish signal. But, I have to be more bullish than bearish, as I've said from the beginning, at least for the next couple of days. But that's what I'm thinking tonight. And, we'll see what the market looks like in the morning. What are rates telling us? I mean, all we're hearing about is inflation, inflation, inflation. Fed's going to start to taper their quantitative easing. That means rates should be going higher. And what are rates doing? They're kind of trickling lower. Is somebody worried about the economy? AD lines, well, they lead higher. I should have changed this. Lead higher on the high cap, and that's bullish, but not on the Russell 2000. So we're at all-time highs on the large caps, the Russell 1000, on stock price and on AD line, bullish. We have not been able to retake the highs on the Russell, bearish. You want to see something else concerning? How about the Nasdaq? I believe this is the Nasdaq 100 advanced decliners. The Q just off all-time highs, and look at the AD line. That's bothersome. And if you're looking for a reason to be concerned, that's a divergence. That is bad breath, and that is something to be concerned about. We look at the NYSE, we've now had 2 lower highs and lower lows. So clearly the AD line on the broad-based NYSE has rolled over. Notice at the top, all-time high, still the Qs, the spiders, and the diamonds. You got the transports and the IWM rolling over with the AD lines. And the one thing benefiting down here is TLT, especially with rates easing a bit. What about breadth? Well, stocks above the 200 dropped this week. Stocks above the 40-day dropped this week. And if I look at the 3-month new high, new low, it also weakened. So you would want, as a sign of market strength, to see these things getting better, but not to an extreme. They got a little bit worse this week. Last week I spent an inordinate time talking about the market. I'm not going to say go out and sell everything where I'm worried. I'm going to try and give you clues or my thinking, let you make your own decisions. But probably if I'm going and doing a 2-hour program, it means I'm concerned about the market. And we saw weakness last week. We just saw a reversal on Friday that hopefully it wasn't a one-day wonder if you're still long. The Daily McClellan, another reason to think that we bounced for a while is, you notice this on the McClellan oscillator, we came right down to the same yellow line that bounced. This was the last bounce. We actually went even deeper, but these were the prior bounces, including going back to 2020. See all the bounces. What did we do? We came back to the bounce and we reversed. Steer clear-cut divergences as we can't even turn the summation index. We look at the weekly, same thing. We got down close to an area of reversal, but divergences still sitting everywhere. The buckets, half the stocks are below the Bollinger Band midline. That's a slightly bearish to medium indicator. Not a lot of stocks below the bands or above the bands. So a weakening market, but not an extreme. Hindis. Well, the NYSE is kind of where this indicator or this old wives' tale or this, magic thing is. The Hindenburg omen fires before every major market correction. Problem is that only 1 out of 4 are meaningful. But there hasn't been a big market turnover since the World War II without a preceding Hindenburg. So I look for Hindenburgs. Hindenburg's required to have both new highs and new lows above 2.2%, a rising moving average, McClellan less than 0, and the new highs can't be, 2x the new lows or something like that. When all 4 of these hit, that's what a Hindi signals. The classic Hindenburg, which is still an old wives' tale in many people's mind, is calculated on the NYSE. Now, the NYSE today might be different than the NYSE of old days, with a lot of bond funds and other things that might behave different than the market. Therefore, I look at the Nasdaq as well. If I look purely at the NYSE, there was no Hindis. In green shows me we still have a fair number of new highs, although they've certainly come down, but we have very few new lows. Notice the Nasdaq. Notice that in the last 3 or 4 weeks, we've had 5 of these things. The more you have, the more concerning. And I think we saw that play off with the Nasdaq pulling back down in a correction. And you could see that we started seeing some new lows here going above 2%. But what happened on Friday? Both the new highs and new lows went back. So what does this tell me? It tells me still at market at risk. I think the Hindenburg is mathematics that sort of identify that period of time when the pros are selling and the amateurs like us are buying, and there's still new highs, they're distributing, and then the market rolls over. So this is a check in the bad column. Now, I want to put a check in the good column. A kahuna is a big move in percent beat, something that was taught to us by Ian Woodward years ago. And what is really awesome here is that we had across the major indexes just almost a complete run of blue here, which is a big bullish move. The question will be, will that just be a shot across the bow of the bears and the bears will keep on going? Or is it going to cause the bears to turn away for a while? Look, we have a lot less red on Friday, so I'm hopeful. Now, when I look at last week, it was an ugly week. Imagine if you had all the fundamental data, the relative strength ranks and everything from last Friday. And then you were able to run a test and ask, how did various parameters impact on my performance this week? Well, that's what I do here. EdgeRater allows me to import the database from HGSI a week ago that I saved as an HTML and ask between the 14th and the 20th, how did stocks perform based upon ERG? ERG is EPS rank plus relative rank plus group rank. The high growth stocks live over here. I always throw out the head and throw out the tail because this gray line shows you there are very few stocks at the edges. But what do I see here? I see almost everything was negative. It was a tough week, and growth certainly was not leading. I look down here, in fact, the higher EPS rank, the more bad you did. The higher relative strength rank, the more bad you did. Not a good week for growth. If we look over at some of the individual groups I watch, you can see I had a crappy week. I'm the first to admit it. I'm still way up on the year, way above the averages. The S&P was down a little bit on the week. The way we calculate it was down at about 0.6. In gold, and all performing worse than the S&P across the board. Market Smith 250, Ibd50, the weekend review, all down less than 1%. The RS line blue dot, which was my favorite scans in Market Smith, was actually down 4%. In green, you can see I was down 2 to 3% across the board. Now, it's not really fair to say that, okay? Weekend bears, I want to be down. So my 10 stocks, actually the weekend bears is a big list. I don't know where my bears are. Thought that was them. I have a list of weekly shorts, and you want those to do badly. Because if the weekly shorts do good, it means you did badly. Shorting candidates were down 3.15. So 14 out of the 17 stocks I considered for shorting, which some I took, were down for an average of 3.15%. And then my current holdings, which says down minus 2.19, I have shorts and longs there. This only treats them all as longs, so it's really irrelevant. The buy watch is my kind of stocks, and it just shows you that growth was not working. I like looking at long-term ratios, and I'm always checking to see spiders versus the RSP, SP 100 versus a broader, both of which stuck their noses up higher after Friday, which is good. In a long-term bull trend, you expect the spider to outperform, the S&P 100 to outperform. Here's the Nasdaq 100 versus the overall composite in a long-term bull market that will outperform. So these three look a little bit better this week. This is kind of interesting. I said, let's look back to 2017. And I'm a growth guy. And I'm a long-term believer in canceling and following O'Neill. I like it when my buddy Gil Morales makes comments that canceling doesn't work and then people get mad at him. Well, you know, look at this chart here. Here I'm comparing the Ibd50 Etf. So this is a managed ETF where they're rotating in and out stocks as they come in and out of the Ibd50. And I'm comparing it to the Wilshire 5000, a very broad market. Now, if growth was working, then you'd expect this to be a lower left, upper right. And really what you see is that it worked really well to 2018, and it hasn't worked since. Now, there's a period of times, late 2020 looked really good, but this is kind of ominous, I think, for canceling, perhaps. But I also tells me, as Ian used to do a chart of when cancel was working and not, that when it works, it really works well. But when it's not working, it's probably not a place to be living in. If you look at FANG stocks versus the Wilshire, it only goes back to 2018 because that's when FNGU started trading. And so they're way up compared to the Ibd50. FANG obviously of late has been strong with big cap tech. And then the other thing is you want to see the spider versus bonds going up like this. This is what happens in strength. This is what happened in 2020 as the market rolled over, and we're going sideways. So that's another piece of indecision. Reversions to the mean. I talked about that green candle low at the high jump or low jump. the green candle at the low jump. I use a red candle high at the high jump. And this is something that Chris did at EdgeRater for me, where I can run a large, you too, if you have EdgeRater, this is the name of it. You can run your stocks and it tells you if you've hit the high jump or the low jump, and then you can define the values, and then what are the bullish signals you're looking for. So I'm looking at a reversion. If it's a high jump bar, meaning the market's extended, do I have bearish signals at the high jump? And if it's a low jump, do I have bullish signals at the low jump? So I did look at some of these. There were a lot of steel and material stocks that might benefit from a weak dollar. Sector strength, I guess it improved. I probably should have changed it to mixed. Sometimes I've done these slides, and that was probably a mistake. I've done these slides so many times that I forget to change the titles. And you know, when you read something you've written 10 times, you don't even pay attention to it. So I think sector strength probably weakened as I look at this sheet. But a much better way, I think, of looking at the sector strength is to look at Sager's wonderful Q tools. Top row are sectors, middle row is industry groups, and the bottom row is stocks. This is 1 day, 2 day, 5, 10, and a month. You can see over a month, the markets have been more bullish than bearish, but kind of mixed. Over the week, it was a bearish week, a very bearish week. In fact, if you look at over the 2 weeks, 64 and 72% of the stocks in the market were down. 84 and 73 of the industry groups were down. 82% of the sectors were down. And then something happened on Thursday and Friday. The market reversed. And look at Friday. All sectors up. 90% of industry groups, 86% of groups of stocks were positive. A very bullish day. Is that a reversal or is that a bull trap? One thing that maybe is bothersome, if I look down here as a buckets a different way, so here's that same buckets where a few more stocks are to the downside. But look at where you start with below the bands and the first decile, second, third, fourth of the Bollinger Bands. We had a really great day on Friday, yet most of the stocks are still below the midline of the Bollinger Bands. Is that bullish because we got a long way to go? Maybe. Is it bearish saying that that was a one-day wonder, but most of the stock market's still doing poorly? You know, I guess you can call it whatever way you want. Sector performance, 5 days, 10 days, 2 out of 9, 2 out of 11 were positive, bearish, over a month, a little bit better. Look at the sector performance on Friday, everything was bullish. So I gotta say for the week, they're bearish, but improving. Now this is Sager's wonderful tool. Let's just look at the real thing. I apologize, I may have to figure out why. Every time I do that, it takes a while to catch up. I keep switching computers around and trying different ways to do this. I showed you this part already. Let's go look at the sectors. Now the beauty of this tool is it's real time. Unfortunately, it needs Thomson Reuters or Refinitiv data to run. I know you can't see that. But I do this what I'm showing you right now all day long. Since the markets are closed, there's nothing in the real time. And on Friday, all 11 sectors were up. And if I rank these greatest to smallest, you can see that discretionary, financials, and communication were the top 3. Now, case to point out, this is based upon the S&P 1500, not about the 500. Sometimes there's differences. The weakness, energy, staples, real estate, materials. So it wasn't a defensive day. In fact, energy may or may not be defensive, but staples, real estate, utilities are the defensive things. Utilities surprisingly strong, considering that. Now, a top-down person says, let's look at these, perhaps the top 2 in sectors, give it some love, and then here I am on a real-time basis. During the day, I hit the gears, and this is going to give me a list of industry groups, and yes, I know it's hard to see, and I'm going to rank these industry groups from highest to lowest. And then you can see these industry groups, by the way, are all in the two sectors that we chose. So these are the industry groups that come to the top. And what I do, again, I do this during the day. I'll come down to say 135. 1, 2, 3, 4. So 6 groups. Now I'm going to hit these magnifying glass. And now I will list all the stocks in the S&P 1500 that are in those industry groups. And then Sager has algorithms that hit the 3 stars and will find stocks that are undervalued, meaning they're inexpensive for their value with lots of growth. And you can see a number of them here. And then if I list them here and I hit the grid, I can go down to my trade station. I'll just drop them down into this tool here. And I can just bounce through them very quickly and see if anything looks interesting. So we start with Foot Locker. So remember, these are undervalued. Now I see a lot of trend lines above it, so a lot of resistance. Let's do the next one. Dick's Sporting Goods. I like this one a lot. Pull back, had a new John Person buy and a reversal on Friday. Beautiful uptrend, so I might consider Dick's. Ibd Sports. It's still bearish on the weekly, but a nice reversal on the daily at trend line. I'd rather have it bullish on both time frames. How about Macy's? Great earnings blowout. It's so far above this band, I wonder if it's not had a big run and it's going to come back to earth. Genesco. This is interesting. A buy sign off a trend line support on the weekly. A breakout above a trend line on the daily. I could be interested in that one. Sally Beauty Holdings. Too far down here. It's got trend line resistance. It also looks weak on the weekly, but that one's probably going to rebound. Best Buy's got earnings this week, so I didn't consider it. Marine Max, I bought boats from them. I just don't like the weekly sell signal, but a buy signal off of, it's got to be huge support. Look at all these trend lines. Abercrombie & Fitch, a reversal on the weekly, reversal on the daily, a new buy signal from John Person. Looks interesting, it just has to get above resistance. CAL, kind of interesting, pull back to trend line support, breaking out above resistance, lots of support underneath, probably a very low risk buy. And I can go through Zoomies, I don't like the weekly. Cons, this is a Best Buy-like company that's not done nearly as well. Guess Jeans, I mean, again, pull back to weekly support and a move up, buy sign on the daily. It's near what Sager's program said will be resistance, but in my opinion, in my experience, when it's fallen so hard, the resistance is probably closer to up here, so that's interesting. So what I did very quickly, and what is this? This is Buckle, I guess. Doesn't look so good. So what I did is I took his technical and fundamental mixed and came up with his stocks that were undervalued fundamentally and picked something I liked. So let's say we liked Dick's Sporting Goods. Now let me see if I can pick that one. Sally Beauty Holdings. I didn't like the chart, but I like the valuation here. Look at the last quarter earnings per share growth, year over year growth. Wow. Wow. Now he's got another tool. I'm going to copy Sally Beauty Holdings. And I'm going to open up his Vital tool. Now, the Edge tool is limited to the S&P 1500. The Vital tool looks at everything in the market. And for those that like trading stocks outside the U.S., you can actually start doing things with other countries. So it's going to take a few seconds here. It's fetching the information. So what it's going to do, it's going to look at a little broader description universe of industry and take a second. Awesome. It's starting to fill out the fundamentals on Sally Beauty Holdings. It's giving me a list of stocks that are similar or in similar groups. It's telling me that 93% of the stocks of its peers were up on Friday. Pretty bullish day. It shows me the short-term earnings per share growth is crazy, as is the revenue growth. Very undervalued with good earnings quality, short squeeze candidate. Insiders are buying, that's why it's high. It's not perfect. And then I can look here at its peers. It's just another list. These are stocks that are like Sally Beauty Holding. And I could again we'll hit the crown, which are the crown jewels, and see what comes to the top. And many of these are the stocks we looked at before. Flowers Bakery, SPWH is different. Let's very quickly, let's pull these over and we'll look at the new ones. Copy that, go to the grid. It took me a while to figure out all of his names and his different links that he used. The guy's a genius. I can't believe the stuff that he comes up with. He's so modest. Although he does say during his webinars, tools that he developed. That really impresses me. Big Five Sporting Goods. I could buy this. Pull back to support and reversed. A new buy signal off support. That looks interesting. Dix we already looked at. Hib Sports. Didn't like the weekly. Sally Beauty Holdings. Didn't like the chart. I liked its fundamentals. Container Store, no. Here's Marine Max again, no. Party City, nah, I don't like the weekly. Sportsman Warehouse, I think it's a buyout. 1-800-Flowers, not interested. So I think, we looked at this, we came up with a couple of ideas. But that's what I do during the day using Sager's tools. I do it at night as well, but at night I probably spend more time in HGSI. All right, thought I'd show you that instead of just going through the PowerPoint. Hope you like that. Again, feedback is appreciated. I know I spend way too much time on the market, but I'm a market guy. Canaries in the coal mine, they're consolidating. It's hard to say they're bad. And it's not just the FANG stocks, as you can see up here. And price lines bookings. One day I'll change the slide. It's sideways move, not bearish. Probably since it's above its major moving averages, it's probably a little bullish. Know your news and earnings. This is an interesting week. Thursday, Friday, and Saturday is the Jackson Hole meeting, which is now going to be virtual because of Delta variant. I think Powell speaks Friday afternoon, although I can't remember. Everybody thinks we're going to hear about tapering and it's going to spook the market, which means it probably won't. And maybe that's why interest rates are coming down. It's a big week for news just because of that meeting. You can see some of the other things, including Thursday's jobless numbers. Looks like a lot of retail earnings when I took a quick look. Some of these Asian ones, Chinese ones like JD.com have been challenged. Alibaba, even Beijing, one of the pharma companies, got taken out and hit last week as the Chinese government is getting their nose into these businesses, corruption, etc. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So the market set new highs early in the week and then sold off and then had a big move up on Friday. On the week, the Dow lost 2.5%. The others were the Russell was down 2.5. The Dow was 1.1. Both the Nasdaq and the S&P were down less. Talked about the nice reversal. A lot of this is news-driven. Fed's tapering, retail sales, total housing starts, Empire State Manufacturing Survey for August were weaker than expected, yet claims improved. Clearly, there's policy risk. Then we have the abomination in Afghan evacuation, and then the Delta variant. Despite the concerns of Fed action, I find it remarkable that despite imminent potential tapering, rates fell this week, suggesting to me, there's a little fear about where the economy is heading, and that was fed by things like the housing starts, retail sales. Now, the market, look at this, we're still, what a year. It's only August. And if the year ended here, it would be considered a very strong week. My week, again, as I mentioned before, was tough. It was a lot less tough after Friday. Like the market, my account saw some recovery on Friday as it looked like another buy the dip moment. I see lots of signs suggesting we could have a couple more strong days as we enter what is actually less bad seasonality than you think. I still am concerned with Fed action or lack of clarity as well as additional economic data hitting at stagflation might tip us into that correction. Buoyed by early year performance and profit taking, I'm still way up on the year, at least double the averages, if not more. And that said, trading messy, choppy markets as we have done for the last several months are challenging. All right, that's the beginning. And again, I spent a lot of time on the markets for the main reason I'm a top-down guy, and the ultimate top is the market. Now, I don't need to spend much time on my TradeStation review, but I did want to see if it's holding, and that was, I look at six things rather. I pull up the futures. This is the S&P futures, and this is daily, weekly, and monthly. I look at these green and magenta arrows. A green is a person buy signal, a magenta is a person sell signal. You can see we triggered this after with the market opening today, a new buy signal. Clearly big uptrends. In fact, if you look at this monthly on the S&P, does that look sustainable? I don't think so. Pretty impressive. I look at the color, green, especially on the most recent one, which is an Alexander Elder indicator. If it's green, you can buy or hold. If it's red, you should be short or holding. If it's blue, you can do whatever you want. I look for these little red dots, which you can see here, which is evidence of divergences forming that might be concerning, but as you can see, we can go a long time. I look at where we are in the envelope, but again, we can run up for a while. We're not in the envelope. This is a Laguerre RSI. I've been playing with these, and it was spot on with the turnover the last several times. And we'll see if we get a buy signal on that soon. I don't think it's come back far enough, but I don't pay that much attention to it. I look here for this middle dot here, which tells me the weekly bond goes green. That says I'm still in a good long-term uptrend. And I look here at 57%. I know I'm not in a point where I'm so extended, I'm going to reverse. I look at the S&P, I say I'm bullish, cautiously bullish. I look at the Dow Jones and I see red, that's bearish. I haven't seen a reversal bar. It's green so far, that makes me feel good. I look at these really bottoming tails sitting here, and I'm cautious here. I think the S&P certainly looks stronger, but the Dow looks like it's reversed. Speaking of reversing, you look at the Russell actually had a buy signal come in on Thursday. Now look at these John Person signals. They're free in Thinkorswim. It's an add-on you have to pay for in TradeStation, add-on in HGSI. There's much more to John than buy and sell signals, but they're pretty damn good signals. And I'm seeing one here. We'll see where we can run it. Longer term, it's not in a buy signal. If you remember, this is the one that's going sideways. And then the Nasdaq also got a buy signal on Friday. None of these are extended. They're green. It's interesting. Move on. So I feel good from a long-term perspective, or from a trading perspective, to be positioned here at 9:05 on Sunday before the market opens tomorrow, feeling a little bit more bullish than bearish. Now then I go into Major Markets Plus and HGSI, hit the warehouse view. Let's rank these by top down. And it's probably not going to be the right order. I'll take it. I've got the S&P right here. This tells me what moved the most over the last week. The most bullish were Bitcoin, utilities, biotech, Nasdaq, FANG, and what was underperforming was gold, silver, oil, commodities, gas. What does that mean? That the dollar was strong for part of the week. All right, very quickly, S&P 500, we've looked at it enough. Again, another pullback towards the 50 and a bounce, buy the dip, buy the dip. I guess that's what it's telling me. Look at the tail on the weekly. You can't see it up there. More bullish than bearish. I look at the Dow Jones Industrial Average We saw the weekly bongo remains green, which is bullish. Pull back to the 50 and a bounce. Am I more bullish or bearish? As long as it stays above that 50, I'm more bullish. If I look at the Russell 2000, you can see in the weekly how it's gone sideways for quite some time. Pull back to the 50 in a reversal. That's a high close doji on the daily. I don't know why I didn't call it. A kahuna coming out of a squeeze. My guess is we go up and test the upper channel. I've got to be bullish on that. And then if I look at the Nasdaq, yes, I'm more bullish than bearish most of the time, but it's easy when the market's been the way it is. A new person buy signal sitting on the 50, taking out multiple moving averages, the PSAR. That's just ahead. I need to take that out. The chandelier is below. Person buy, pocket pivot on Thursday, kahuna on Friday. Again, more bullish than bearish. So I look at the major indices. I feel pretty good, at least for the start on Monday. Let's look at some of the things underneath. Let's look at the Ibd50 Etf. And, you know, if I want to be bullish or bearish, you've got a bottoming tail on the weekly. You got a reversal on the 50 and a squeeze and a kahuna. But you can see it's been so crappy, it hasn't flipped the bongo weekly since March. So I'm not bearish, but I have to be convinced on the Ibd50 Etf. If I look at the Microsoft sector Fengdu, again, pull back to the 200, a reversal, but still has a lot of, just like the Ibd50, a lot of overhead resistance and people may be waiting to sell. That could slow it down. The Nasdaq Biotech, pull back to the support, looks like an opportune buy time. I'm long LABU, but if it fails the 50, it's going to come to the 200 and I'll be out of my LABU. Now, if you notice, some days the IBB and the LABU don't behave the same. You have to look at the components. If I'm correct, Moderna has a huge percentage of the IBB. If we look at Philadelphia Semiconductor, obviously an important index for the market, sitting right on the 50. Again, another one that had a bit of a reversal bar this week. We'll see if we can't turn it negatively. It's got negative person buy signal. Its weekly bongo is red. I'm not convinced yet on semiconductors. Sometimes I'll spend a few minutes and just blast through the Cathie Wood things. Autonomous tech, sideways below the 50. FinTech, sideways below the 50. Genomics, way below the 50 and the 200. Innovation, sideways before the moving averages. Israel, sideways before the moving average. Next Gen Internet, sideways below the moving averages. Space and exploration, just messy. Hard to get excited about any of those. And then you've got the Bitcoin Trust, where we talked about it a couple weeks ago, and I said I was bullish, and I'm still bullish. In fact, I talked to my son about that today. Maybe he's right, I should own more Bitcoin exposure. Fortunately, he doesn't listen to these, because if he did, he'd be calling me immediately to laugh at me for saying that, because I've always been a little bit resistant on Bitcoin. Here's the dollar. You can see that it broke out this week. Kind of an inside day on Friday. It doesn't really mean anything. Frankly, a red candle high. You know, it's up at the high jump. It's extended. It's a natural place to pull back. But a pullback to the 50 and a bounce is not going to be very bearish. I'm one that thinks the dollar's going down, but you looked at this weekly, it doesn't look very bearish, does it? VIX, I don't even bother looking at because it's so low, although it did have a little bit of a bump this week. Let's look at gold. Dollar's up. What is gold doing? Looks like Cathie Wood funds. Sideways below the averages. What's silver doing? Not even worth talking about it. And then if gold and silver look bad, how do miners look? Look pretty bad. Now, we got a doji there. Does that give you a setup for a morning star and a move up? If you want to be bullish on gold miners, here's why you should be bullish on gold miners. Well, let's make it a color we can see. Why don't we? We got clear lower lows. And what do we have on relative strength? We got bullish divergence here, or as John calls it, convergence. Might be something to watch. Maybe we get a run back up in here. Problem is you got all kinds of resistance in here. And whether or not we can break above the 200, still could get a 15% move. That's gold miners. Next thing I look at are industry groups and HGSI highlight 07. I hit warehouse view, I got 174. This was remarkable. 2-day up, I've got 73. So short-term momentum, 73 out of 147 are positive. 2-day down, I have nothing. That tells you how strong the market was on Friday. I don't remember seeing that. 5-day up, a little bit longer term. I only got the longer term momentum. I had 30, but think about it. Friday was a reversal day. And if I look at 5-day down, I probably got even more. I've got 63. So short term, we're showing strength. Long term, we're still negative. So what I do is I'll go to this 2-day up, and let's look at a couple of these groups. I highlight, I right click on semiconductors, I left click on change index group, and the top stocks come up here. These are being ranked by forces. Today's close minus yesterday's close times volume. Plot it, you can take moving averages of it. We're using a 2-day exponential. Force comes from Alexander Elder, although I've never seen him use it this way. Nvidia had earnings last week. I had, going into earnings, it actually sold off. You can see the tail right here, and then closed really strong. I'm looking at Nvidia, and I'm seeing a stock that if I want to be, well, you know what? You got to look at it over here. If you look at closes, all-time close on Friday, breaking out. Intraday, you had a reversal here that you're right about the same point. I think Nvidia goes higher. I see a weekly Bungled that stayed green. I see a new John Person buy signal, took out of the PSAR dot, chandeliers underneath, person buy, a bunch of pocket pivots, and a couple kahunas in a row. To me, that's a formula for going higher. And as I said, I'm speaking my book. I already own some. AMD, we've got sort of a pullback here. Do I love AMD? Do I think it goes higher? Absolutely it goes higher. But I guess I want to see it break above that line. No problem with owning AMD here. I less like to see it break out first. Earnings per share are great, and obviously they're tied to DRAM. Those are the only ones that were above the index. I'm sure there are other good stocks here. I'm going to stick only looking at the ones above the index. I right click on my mouse, I left click back, now I highlight e-commerce discretionary, I right click on my mouse, left click change index group, and I'll look at the ones that came up that are stronger than the index. Netflix, this thing has been dead. Look at this. It ran up in June last year, and it's like the Russell, it's gone sideways. It's not even close to its all-time high. And a huge couple of days. I love this pattern. It was basing, got yourself a cup, not much of a handle, and a breakout, and you took out your chandelier stop here. So you have pocket pivots, you have a new person buy, you have kahunas, level breakout from a squeeze, so a number of momentum indicators. Your weekly buy was green. Now, that said, I just said I liked it. I like the pattern. The challenge is I'm not sure if I like the stock. I love the company and I love their stuff, but it's not as if they're the only ones that have the streaming, and I don't know when we have too many. I have every one of them just because I'm stupid. Netflix, Hulu, Disney. I got 3 TV providers plus cable at home. I don't know how to turn things off. I think I need to go to Spenders Anonymous. But Netflix looks good. Curiosity, I'm going to go into Thinkorswim, and I'm going to go over to charts. Just type Netflix in. what I want to look at is this. So Netflix is going into a period of strong seasonality. And you can look here at seasonality by month on this chart. So maybe Netflix is a seasonality play. Love what it's doing. With all the streaming companies out there, I always wondered. But then again, they're getting into gaming, so it's a whole new business. Etsy, one that I owned a lot during the COVID early days, kind of looks like Netflix if it can break out above a chandelier stop. Global breakout from the squeeze on Friday. Notice the weekly bond is still red. Pocket pivots in Kahuna. I think this is a very constructive appearance. Earnings are out. Don't like the earnings per share growth. But a breakout above the chandelier stop, I would think, is playable. Again, lots of things here. PDD was a great stock. Keyword was. It's part of all the Chinese crap that's going on, so I wouldn't touch it. Interestingly, right below it is Amazon. And what do you do with Amazon? Amazon was sideways for months, and it broke out, came back, broke out, came back, it's right back in its sideways channel. As I said, I had pits at 3,700. I've been to this rodeo enough times, and when it popped up above here, I said, let's, rather than sell my stock, which I ended up doing inadvertently. We have some major taxes to pay, but c'est la vie, you don't pay taxes unless you make money. I took puts on it when it popped up to 37.50 because I remember what it's done in the past, which has come right back to the bottom of the box. And what is it doing? It's looking like it doesn't want to do anything. That said, if it's going to launch, it's going to launch from here. So I'm going to watch it and maybe cover my puts. We'll see. Mercado Libre, there's some good stocks here. This Amazon or eBay of South America, I've heard both explanations. It's just an expensive stock. Pullback, high base. I look for some momentum to come in there. And then eBay is another stock that has been performing very well. Kind of loosey up here. Right click, back, highlight the next one, biotech. Right click, change industry group. Only a couple made it above, so we'll look at those. And then I'll go look at Moderna. Novovax is a vaccine company. A lot of people think that their vaccine will be less difficult to administer and to store than Moderna and Pfizer. It's more of a traditional vaccine from a traditional vaccine company. They had a good, well, you can see on the weekly, not a great week. The week before, they had a majorly strong week, even with Moderna selling off. They had a great day on Friday off of the 17-day. And if they get their approvals, it's all about earnings per share growth. The next one down is Regeneron. We gave you this somewhere back here. We talked about it there, going to all-time highs, doing very well. Trail your stops, don't give up your profits. Moderna has been an interesting story. I have to admit, sometimes you get lucky. I know you make your own luck, but I was telling everybody not to own Moderna, and then I couldn't help myself. With these 3 days here, I bought it around 420 when it broke out. Now, my original buy wasn't so good. I bought calls. I did a Scott synthetic where I bought some calls, and then I sold a put and had a protected put. And then the stock had some really pullback, as you can see here. I got shaken out of my short put spread, and then I wrote it up, and then I sold long calls because I was pissed that I lost the money on the short put spread. My long calls were at 530. I was pretty much able to top ticket, not at the high, but when it was 485-ish, 490, I sold out my Moderna, which would have been on this day. I sold off the long calls, and I'm still sitting in some short calls that are hopefully going to expire worthless. They're now $140, $150 out of the money, so I'm feeling pretty good about that. Fast mover, the problem with Moderna, and I've said it before, it's still got a market cap of $154 billion. Way too much. Way too much. Nobody can buy Moderna And for them to be worth 154, all their cancer drugs in development have to be blockbusters. And we need to get booster shots for life, and nobody else can get approved. Just the valuation is totally wacko. And that's why I left my shorts. Look at the earnings per share growth. Jeff, you're crazy. I don't think so. I think this will be just like Gilead with hepatitis C. And then what happens to Gilead, I showed it to you last time. I showed it to somebody. Gilead there was a period of time when Gilead was the best stock in the stock market. Here we go. Look at this move. 18, 68, 76, up to 84, 92, 110, and then, oops. And now their drug is still great. They've cured AIDS. Well, they haven't cured it. They've made a big dent in AIDS as a company. They've cured hepatitis C, and the stock has never gotten back up there. And it's just languished. Their revenues are amazing, but they don't have growth. And that's what I think happens to Moderna, is they get their time in the sun, which is what we're experiencing now, and then they're not going to have the revenue growth, and there's no way that they'll justify that valuation, in my opinion. But what do I know? Department stores, left click change index group, Macy's. We're going to look at this one in Kohl's, and then we're going to start to look at my buy watch. Macy's great earnings, Kahuna's, new John Person buy signal, right off the 50, global breakouts, Bible gap up, flip the bongos. It's beautiful. Looking forward, they've got great earnings per share to come. Probably expect the stock to go higher, but does it consolidate a bit before that happens? It might. What's its market cap on a $6 billion? All those stores. Obviously, biotech versus department stores. Tell you what looks interesting to me is Kohl's. Just it's in the right business. I love pullbacks to support and breakouts. On Thursday, you had a Kahuna mobile breakout. Still hasn't flipped its bongo. Awesome earnings per share growth. You can see how their revenue took a hit in April compared to January, but still looks good compared to 2020. Broke out above the moving averages. I think this looks opportunity as well. Specialty apparels, really quickly, I think there might be some. And this is the group we were looking at with some of Sager stuff, Foot Locker, Bible Gap up, closed at the 50. I have no trouble being long this. I just wouldn't let it drop much below the low of that day. So here's the little, stays above that, stays above this on the weekly, fine. Bed Bath Body Works, breakout, that looks pretty good as well. Again, these retail stocks, if they meet their numbers, they've got great earnings per share growth. Earnings are already out on Bed Bath and Body Works. Sally Beauty Holdings didn't like the chart as much, same industry. TJ Maxx breaking out. Gap has got earnings this week, I believe. Starting low in the tooth, look at the bottoming candle on the weekly, sitting right off the 50 with the new John Person buy. Pretty awesome earnings per share growth. Express, cheap stock. And this looks like an interesting place to be. You're probably getting tired of hearing me. I'm getting tired of talking. I want to show you something cool. And then first start with the buy watch. So I do this routinely. I go through thousands of stocks and I come up with a list that I'm going to be paying attention to on Monday. And then I will add and subtract from this list as the week goes. So the first thing I look at, what comes out to me? A lot of REITs, something like American Campus Communities, pays a 3.8% dividend, got great growth, earnings are already out, it's pulled back to the 50, and I've got a green candle low, I've got a weekly bongo, a mobile breakout, a John Person buy, a pocket pivot on good value. That looks interesting. Is it a rocket ship to the moon? No, but it's a good dividend payer that might be a good place to hide if the market gets challenged. What else really stood out when I looked at it? Some of these we've looked at already. I'm not sure I'm interested in orange, but I'm really bummed ever since AT&T did their spinoff and they cut their dividend. I mean, so orange sold off here, been basing, low base, broke above their 50, mobile breakout from the squeeze, a kahuna. Look at the improvement, sideways stock, improvement in relative strength, that's always a winner. Reversal on the weekly. A lot of ugliness here. I'm not saying high growth stock by any means. But what I liked about this one and what drew my attention to it is I like these 7% dividends. AT&T's cutting theirs, but that one looks interesting. Marathon, Riot, MSTR are companies, and there's a number of them that you can use. Silvergate to play Bitcoin without buying Bitcoin. This looks just like the GBTC. This looks interesting. Mara, Patent Group, Marathon Digital Holdings. They mine and own Bitcoin. You can see the earnings per share growth. Lots of demand. Certainly not overpriced. Hasn't run yet. We've got mobile breakout. We've got weekly Bungled grain, person buy, pocket pivots, and kahunas. A lot of bullish momentum. That looked interesting to me. And again, not extended. Boring alert. Progressive Insurance, sideways move right below the chandelier. It's got to clear that. Mobile breakout from the squeeze. Person's buy signal, a kahuna. And the same thing I showed you before on a couple of things. You got really a sideways stock, and you got person market catcher giving really impressive bullish convergence. Some of my biggest winners are when that pattern sets up. So this is Progressive Insurance. Oh, by the way, it pays a 5.0% dividend rate. Maybe I've got my new AT&T replacement. What else did I like? Rent-A-Center. I've liked this off and on. It looks like it's going again. This will be one of the big benefactors if they're able to pass the first of the infrastructure bills. There's DICS, so you could stop this and take a look. Who would believe on a growth stock guy loves Microsoft, but I've got a big position in Microsoft and I love it. Steady Eddie, beautiful uptrend. Is this a terminal run? Is it going to basically do a climax run? Who knows? But my God, is it beautiful? Breakout on Thursday, mobile breakout from a squeeze, pocket pivots, kahunas, everything's green. Earnings per share growth, not that exciting. Earnings are out. Maybe it's a safety play. There's a lot of stocks that look good. Google's look pretty darn good. I already showed you Nvidia. Look pretty darn good. You could look at United Healthcare, pretty darn good. We looked at Netflix. JP Morgan, it's off its high some, but doesn't look bad. Bank of America, it's off its high some, but doesn't look bad. A lot of stocks that are doing really well despite some of the concerns about the market. Now, a lot of you are probably who are new to me. Let me just tell you a couple of things. All these funny names, kahunas, pocket pivots. If you're new to me, email me at hgsi.gmail.com. I'll send you a video and a vocabulary, and you'll know what these mean too. For now, green and blue are good and red is bad. That's one thing I was going to say. How does anybody watch this many stocks? It's simple. Now, Market Watch allows me to stick stocks. This happens to be some stocks I'm looking at as potential shorts. And then a lot of my signals that I follow are listed here. So I am able to monitor these things during the day, looking for stocks that meet certain signals. All right. Now, something I'm playing with, and And there's so many stocks got picked. I broke the number I'm allowed to have. But imagine if you could scan for price and volume, stocks in a weekly bongo that just went with daily bongo buy or yes within the last X bars. So what you would have found are stocks that are in a long-term uptrend that had a short-term pullback. And then all you need to do now is to have one of many different momentum signals. So Bob Meager and I have been playing with this. Bob's been doing all the work. I've been playing with the scans. And I'm getting some really cool results. I'm going to be adding things like the squeeze, but this is what I'm doing along with the Q stuff during the day to find out what's working. And again, I'm a guy that buys uptrends, pullback, breakouts with momentum. And it turns out that this list gives some really cool stocks. And in fact, and we'll talk more about this as we go. Don't bother asking for it yet. I haven't decided if we're going to give it away or not. That's kind of not necessarily up to me. Probably will. We give away everything else. But more importantly, it's not done yet. But when I looked at this list, what I'm trying to find are stocks in an uptrend that have pulled back that have momentum. So if we just look at some of these that come out on the scan. Pullback, uptrend, pullback, breakout. Marathon Digital, we already looked at that one. Medallia, kind of flat, not that exciting, but the parameters. Weekly bond goes up, so it's in an uptrend. Here's your uptrend. It had been in a short-term downtrend and just flipped to daily bond go green. It's in a squeeze. Then it either has to have a global breakout, a Bible gap up, a person buy sell, a pocket pivot, or a kahuna. So that one's kind of boring. Mednax, clearly in an uptrend, pull back to support, and momentum. That looks interesting. Just here's the MSTR. It's kind of like Riot and Mara. Mimecast, semiconductor, uptrend, a little bit of a pullback and a breakout. This is the day I want them. I want to find them when they're breaking out, not when they're too far gone. MPR, MPWR, sideways move, breakout. And you can see the Bongo Daily turn red and it flipped to green as the stock was starting to go up again. Mueller Waterworks, I mean, what a great tool for finding great stocks. And I've tried to reproduce this in HGSI, which will be better. There's Nvidia. So I do different things. At the end of the day, the way I trade is I build a watch list. I spend a lot of time focusing on what the market's going to do. And then I throw them, here's radar screen in, for example, in TradeStation. And I'm going to do my trading based upon what happens during the day. And I've got radar screens that just have my buy watch in it. That note, I think I'm going to go to sleep, or at least cut this and publish it. You all have a wonderful week. I'll look for some strength in the beginning of the week, and then God only knows what comes out of the Fed's mouth at Jackson Hole. Have a great week, everybody. Thank you, and good night.